Hello, everyone, and welcome to this weekly webinar with me, Moneer. My apologies, I couldn't be with you last week, but we are here now, and I would like to go through the latest updates that happened during the previous week. Um, um, there have been many updates, but before we get into that, a risk disclaimer is in order. Please pay attention and be sure to monitor risk as you trade. None of this is to be considered as investment advice. This is for educational purposes only. And it's very important to trade responsibly because trading is associated with a high degree of risk. Now that we got that out of the way, there have been many updates. One positive update is the positive GDP growth figures in the US. The US economy grew at an annualized rate of 3.8% in the second quarter, which is higher than the expected 3.3%. So the American economy is performing well so far. There is no overheating. We noticed that the job market has declined a bit, which was one of the factors that pushed the Federal Reserve to lower rates last month. Now we have to see what the Fed is going to do next in the upcoming meeting. There is a meeting at the end of October. However, there is the opportunity, or there is a risk that there might be a government shutdown if there is no agreement on the funding. So, the, if it were to happen, this shutdown could delay many economic reports, including this Federal Reserve's meeting. So keep an eye on that. On another front, um, global hedge funds have sold their many of their shares in Asian equities due to the upcoming holiday, and that caused a sell-off. We will look at that in a bit. And another key update is about the credit market. There's been a lot of demand for corporate debt, and there are signs that the credit market is becoming hot, and this could cause risks as we move forward, especially to equities or companies that have a high degree of leverage or debt. So before you invest a lot of money in a highly leveraged company, a company that has a high debt to equity ratio, it's important to monitor the risks and be sure that the company has good financial health that will enable it to pay its debt and the debt service. Um, and gold prices have now exceeded 3,800 per ounce. Uh, they're still going up. The trend is pretty much clean. We might see gold approaching 4,000 as we approach the end of the year. Now, let's look at a few charts. Um, I would like to look first at emerging markets, which um, saw some slight bearish activity as a result of the sell off due to the hedge funds selling some of their shares because of the upcoming holiday. We see here that the sell off hasn't been really sharp. It hasn't been that sharp. We still have several key support levels to keep the price elevated here. So this is more likely to be a pullback rather than a a bearish move, a strong bearish move. We're still not in bearish territories yet. Even though we see here that on the oscillators, um, there is a weakness in momentum. The momentum is weakening here on several oscillators. But should the price go back to this strong support level we see here, that the support level at 51.64 has a confluence score of 27, which is pretty strong. So several signs indicate that this is a very strong support levels. Might be an opportunity to buy here, if not here, perhaps at the second support level. Um, I looked at other emerging markets ETFs such as AAGXJ. We see similar signs here, strong support levels, and the price is going back to those levels. And we see here that the volume is we don't see a lot of volume here that indicates that there is a reversal, a strong reversal. So at least for me, this is still a buy the dip kind of opportunity here. Let's look at gold, a gold ETF, which is GLD. We see here that it's approaching, it's currently at around 350, slightly below that. It's in a clear uptrend in line with gold movements. The support level is far from here, so we might see a pullback, a strong pullback. I'm not a big fan of buying at those levels, so I would highly. Um, I think it would be wiser to wait for the price to pull back to a key support level, uh, potentially here at 316. But this requires a motive, a driver. This requires gold price to decline sharply, and so far we haven't seen such a motive for gold and for the price of gold to go down this sharply. So, not a big fan of buying at this point, but if you are a long term oriented investor or a trader, this might still be a good opportunity because gold is definitely um, at least a great way to hedge against inflation in the long run. So let's look at some other key developments here. Let's look at QQQ. We saw a slight decline. I noticed a decline across the board in equities, especially after the rate cut from the Federal Reserve. I think one of the reasons for that is the uncertainty regarding what's coming ahead when it comes to rate cuts, and the potential government shutdown is adding another layer of complexity to that. So perhaps equities will continue their move up once there is more certainty about averting a shutdown. Of course, the government debt issue is a an important one to keep an eye on, and um, fiscal flows are a key factor when it comes to pushing valuations up, company valuations up. So, in case there is a government shutdown, I would anticipate a slight decline in equities. So, I think that is a key risk event to keep an eye on. For this, I would also wait for the price to drop to any significant support level. This one is still significant. Even if the price drops below it, I think it would still be able to attract it um, um, upwards and then keep the price elevated. So with this, I would still recommend a buy the dip um, kind of strategy. We can see that Microsoft, Amazon, and all of those, they have a neutral trend score. So we can see that generally there is a a mild risk off sentiment. it's not a completely clean and pure risk on sentiment in the markets. So I believe it would be better to wait for any for more certainty and around key updates, especially the government shutdown, before establishing long positions. The last update I want to share with you is related to oil. Oil has broken through those support levels. Um, this is WTI. This is we can look at another symbol while I get the correct symbol for oil. But we can look at an ETF such as SCO. Um, there are concerns that OPEC or OPEC Plus might raise production, which means extra supply, extra oil supply, and we haven't seen that tremendous growth from China, which is a big oil customer, to offset that additional supply. So the balance is still to the downside. And if we look here at those resistance levels, we see that they are they are still in play here. This is still a bearish play on this one. Um, Anything below this level, which is 17.19, as long as this keeps the price below it, then we're still bearish on oil and oil ETFs. The major developments on the geopolitical landscape might impact that, but still, technically and fundamentally, the balance is still to the downside. And the oscillators, barring the stochastic, are not oversold yet. We see here that the stochastic is slightly oversold here at this level, below 20 or around 20. So this might cause a small upward move before continuing to go down. And the RSI is still above the 30 level. So there's still more room to go to the downside. So that is all I have for you today. I'll probably see you on Thursday with Kevin to discuss more updates and more opportunities. If you have any questions, please leave them in the chat box or the comment section below, and I'll get back to you as soon as possible on those. Until next time, trade responsibly and profitably, and I'll see you soon.